Welcome to another session, another Zoom session. Yay, another Zoom session for everyone, right? Um, this is about the 401k. Many of you joined us for our benefits overview. So this is about 401k information. I will introduce myself for those of you. I know we have some new hires on here that may not know me. My name is Cheryl Nyardi. I have been with UB for over 14 years. I am currently the Assistant Director of HR, but on July 1, I will be the Director of Human Resources. So I'll be here, still be here for anything that you guys may need. All of our onboarding activities have been going great. Most of you have finished your benefits information, your Paycom information, and we're ready to launch going forward July 1. Everything will be a smooth transition. So I thank everybody for that. I will introduce my colleague, Jean White. She is the Vice President for Human Resources at Goodwin. I'm referring to them as the HR team in Hartford, not necessarily the Goodwin HR team, because they're all our HR team. So, Jean, take it away.
It's really good to be here with all of you. And as Cheryl said, although we are now split between two locations, your HR team is actually one large happy HR team. So you'll have folks on campus with you, and you'll also have folks in East Hartford that are just a phone call or an email away and always willing and able to help. And today, I'm excited because this is one of the last big steps in your onboarding process. You've all been incredibly gracious and just patient in terms of navigating all the steps you've taken over the last few months. And finding out about 401k and how to get enrolled in it is one of the last big steps. So thank you, and I'm excited to see you get all this info. Cheryl, back to you.
So going forward, so if we can go to the next slide, please. We have a robust agenda here for you today. We have a whole bunch of team members that are going to talk to you about the 401k plan. They're going to do a demonstration of the Empower retirement system, which is going to be the 401k system going forward. The introduction of our retirement broker, and as Natasha said, we're going to do Q&As at the end. So please put any Q&As in the chat feature. We have some standard questions that we'll answer, but put them in the chat feature so we can make sure to get to everyone. So I will introduce Susan McGravy. She is our relationship manager with Empower Retirement, and she's going to do the 401k plan overview and tell us all about this great plan that they have.
And my name is Suzanne McGravy. I'm a relationship manager with Empower, and joining me today is Doris Obregon, the retirement education consultant. As our agenda is, first of all, to give you some insight as to who Empower is. Secondly, we'll run through some of the highlights of the Goodwin University 401k plan. And lastly, Doris will hop on and provide a website demonstration of our robust participant experience. So to begin, this is your plan overview. Next slide, please. So who is Empower? We've been around for a long time. Our branding is fairly new, but we started out as Great West, and through some acquisitions, the company grew, and we thought management decided to rebrand to say a little bit more about what we do. And so Empower Retirement came to be, maybe about 4 or 5 years ago, and we've had tremendous growth. We are now the second largest record keeper in the country, and we're very committed to what we do. You may have seen us if you watch the Patriots at all. We are proud sponsors. If you've gone to a game, you'll see our banner everywhere, but we're very active in the Boston area. Next slide, please. As I mentioned, retirement record keeping is our only focus. And, we really make it a really strong point to partner with you to help you reach your goals. And you'll see by our participant experience what we've done to give you all the tools to help you replace your income when you're no longer working. We have ongoing support, guidance. We have an 800 number, and I think you'll find it to be very robust and a solution to help you save for retirement. Next slide, please. As I mentioned, we're going to go through some of the plan highlights of the Goodwin 401k plan. This will just, and we'll answer any other questions at the chat. So next slide, please. So most importantly, when can you get started? You will be an employee of UB or Goodwin University on 7/1. So 7/1 is really the date that if you're very anxious and you want to enroll in the 401k plan, on 7/1, you'll be able to log in and select how much you want to contribute and how you want to invest your money, and register your account, create a password, a login, all those good things. So it's immediate eligibility for UB employees. Typically, Goodwin has a 60-day waiting period, but they've waived that for this group. But there is a caveat. If you do not go out and enroll, in August, you will receive a letter in the mail letting you know that you will be auto-enrolled into the plan at 3% on September 1st if you do not opt out. The letter will have instructions on how to do that. You can either call our 800 number or go online and opt out. Or if you make any election at all, whether it be 1% or 10%, you would be opted out of the auto-enroll. So again, 7/1 if you want to enroll in the plan, 9/1 you will be auto-enrolled if you do nothing. Next slide, please. So you're in charge. You are able to save as much as you want or as little as you want, up to the IRS maximum. You can change your contribution at any time, and you can invest in a way that suits you and your risk tolerance. And we'll talk a little bit more about the investments as we move along. Next slide, please. How much can you contribute in 2021? Well, the IRS annual limit is $19,500 annually. And if you happen to be over 50 like myself, you're able to put in $6,500 more. That's allowing us to catch up for all those years we didn't have 401k. So pretty robust savings. But there is something that you need to focus on a little bit here with this transition year. If you've been contributing to your 403B for the first half of the year, you will have to make a note of that amount. I've been told that it's on your last pay stub as far as how much you've contributed to your 403B plan, and that will have to be factored into this annual limit. So, for example, if you're contributed $10,000, you would only be able to, if you're under 50, contribute $9,500 to the 401k plan. So it's something that you have to be aware of. It's, if you make a mistake, it's not the end of the world. We can fix it. It gets a little messy, but we encourage you to pay attention. Goodwin will not have the information of, what you've contributed to the 403B. So it's really, it's on you. Next slide, please. So would you rather have your money now or later? And this slide addresses a feature in the 401k plan. I'm not sure if you have it in your 403B, but it's Roth 401k. And Roth is the ability to pay your taxes now. So the money comes into the 401k after tax. And if you meet a few stipulations, when you decide to take the money out, the money you contributed and any earnings from that money is tax-free. And that's a huge benefit. It's a really nice benefit, actually. One caveat with that is if you make a Roth contribution, you will be matched for that contribution, but the match will always be considered pre-tax. So your Roth portion would be tax-free, but you would still have to pay tax on the employer portion. You are able to split your contribution. That's what I do. You could do 3% pre-tax, 3% Roth, all pre-tax. So you can, it's very flexible in how you want to contribute. Next slide, please. Matching contributions are like free money. I'm sure you've heard that before. And it's free money. And Goodwin has a very generous match contribution for a 401k plan. The company matches 50% up to 5% of your compensation. So if you put 5 in, Goodwin will match 2.5%. If you put 2% in, Goodwin will match 1%. And if you put 10% in and you're really saving for retirement, Goodwin will only match up to the first 5%. So very generous. That match is not calculated into your annual limits, so keep that in mind. Next slide, please. So Goodwin has, and like most 401k plans, a vesting schedule associated with the company contribution or the match contribution. They're giving you the match with the idea that you're going to be a long-term employee, and they're by applying a vesting schedule, they're hoping to encourage you to stay there. The vesting schedule runs over a period of time, and as you can see, there's the years and the percentage. So, for example, if you worked for 3 years and you left Goodwin and you went to another university, 40% of that match would go along with you. If you stayed for over 6 years, 100% of the match, and that's considered 100% vested. So a vesting schedule, it's pretty standard in the industry. And again, it's in place to encourage long-term employment. Next slide, please. So we are, Peter, the advisor on the plan, will talk a little bit about the investment choices after my presentation. But one of the resources that we have available for our participants is called My Total Retirement. And it's a professionally managed account solution. I mean, there are people out there that just want to hand the keys over and say, all right, drive my car, just pick all my investments, make all my changes, tell me what to do, help me out. And we will certainly do that for you. There's a small fee for us to do that, but our management is very comprehensive. It's personalized to you. We gather a lot of information about you. It's simple. It's one-on-one. You're always able to call in and speak to a registered rep about your account if you have questions. But how it works is if you enroll, one of our registered reps will call and welcome you and explain the service. Might want to gather a little bit more information so that we can manage your account more appropriately for you. We do make recommendations on Roth versus pre-tax, how much to contribute, Social Security optimization when you get closer to retirement, and drawdown strategies, all along with us choosing your investments and making changes through the time that you're investing in that account. So nice feature. It is there for you. Next slide, please. We also have some online advice that's free. It's a way for you to sort of check on what you're doing, or maybe get a little input on how to choose your investments. You do it online, you enter some information about yourself, and then we'll spit out to you, a pie chart of, the different investments and how much we would suggest would be a good mix for you. But then it's you have to go out and make the changes on your account, and you have to be the one that checks it periodically and make sure it's still in good order. So online advice, it's free, and it definitely helps out when you just want to check and make sure you're doing the right thing. Next slide, please. So target date investment options, obviously the plan, almost every 401k plan in the world has target date funds. And what they are, it's a single fund that is completely diversified in the appropriate risk based on the year you're going to retire. That's all that fund is thinking about, is that you're going to retire in 2025, and they're going to manage the portfolio to reduce the risk so that by the time you do retire, you're at a conservative portfolio, or what they would recommend. So it's a very popular choice. About 75% of all 401k participants are in a target date fund, and we do have them available. And again, you just choose the year that you'll turn 65, 67 for most of you when you retire, and that fund will do all the work for you. Next slide, please. So the power of one, rolling in money. This is a big question, and we had a lot of questions in the last meeting. You are able to roll over your 403B into this plan, or if you have another 401k hanging around out there, which you could roll that in as well. And, we had questions like, why would you do that? Why you do it is it's so much easier to manage one account than have 3 or 4 accounts out in the universe. It's so much better to manage one account's investments than trying to pull, all the investments in and saying, well, really, where am I at risk? So it's up to you. You don't have to do it. It's available. We do have a team that's all they do is help participants with questions on rollovers, if they should do it, and walk them through the steps. There's the 800 number on this slide. We'll make sure that you have all that information, after 7/1. Can't do anything until then. But there's lots of resources there. So if you're thinking about doing it, we have help for you. Next slide, please. So with that, I've covered the highlights of the plan. I'm going to turn it over to Doris, and Doris is going to provide a website demonstration of our powerful participant experience.
Thanks very much, Suzanne.
You're
Good
welcome.
afternoon, everyone. I'm Doris Obregon with Empower Retirement. I'm a retirement education counselor, and I am going to move over to our participant website. So everyone should have the website address, which is empowermyretirement.com. Everyone will need to register and create their own username and password. So for the registration, I'll give you some tips just to make it much more streamlined. Of course, all of the numbers in your Social Security, your zip code for your home address, of course, the address that we have on file with your human resources. So if you've had a move of recent and not updated that information with your HR, we'll only have your previous address. So just remember zip code on file, your last name, please edit it as it appears on your pay stub. So that will include if there's 2 last names, hyphenation, if you've got junior, senior, second, third, whatever the suffix, please include all of that so that it matches up with what we are receiving from your payroll. Birthday reflected 2 digits month, day, 4 digits for the year, and then only the numbers that correspond to your home address, whether it be house number, the building number, or your PO box. We do not need the street location for your home address, only the numeric portion. When you've entered that, you see that we now have you verified. We can now ask for you to include your personal email and your cell phone number because we use a dual authentication process for sending you this verification code. So it will be sent either via your personal email or your cell phone number as a text. I can tell you the text messages always come quicker than the email messaging. And of course, that's the number that you will use to then have access to your account detail. So the username you create, it's not case sensitive. The password is, however. So please use the same combination of uppercase, lowercase letters, numbers, and symbols, and keep that information safe so that you type it in the same way each time you log on to our webpage. So going back, now that you've created your username and your password, you are able to sign in. As you see the drop down, I will direct where that verification code will go. I have my code now. It's about 8 digits each time. It is a different number each time you access our website. So one-time use, and it's good for 30 minutes. So if you are logging into the website several times in the course of a day, you will be receiving a new verification code for each sign-in. So we now see access to our landing page. Quite a bit of information here. I'll try to break it down looking first, obviously, the balance. Everyone always wants to know how much money they have in their retirement plan. So balance information. You can certainly go to the drop down if you have an immediate area to check, let's say, beneficiary or get a copy of a statement. This helps you get in 2 clicks, basically, the information that you need right from one screen. Because again, people are trying to make good with their time and access this information as quickly as possible. If you need to update or check any information you have in your profile. This again is the information that we have on record regarding your personal information, work information, home address, username, password, and also how you are receiving communication from Empower, whether that communication will be all email or all postal. You will choose. The default is always email. If you need to change that to postal, you can certainly contact participant services and have the change made. We'll go back to the landing page because I do want to take a little bit of time to talk about this area here. You can see the future paycheck that our participant today, we have Taylor Smith, will be receiving. She's a 36-year-old individual. She's planning to retire in the year 2050, and we want her to feel that she has an appropriate plan in place. We want her to know, looking at this score that you see here, we call this the lifetime income score, how much money can Taylor project to have access to in the future to meet her retirement needs. Our financial professionals are recommending that you have access to between 70 and 90% of your pre retirement earnings in order to maintain the lifestyle that you grew accustomed to while you were in full time employment. So, looking at this example, we'll consider Taylor's current salary, $54,500. She is a 36-year-old individual, and she's looking to replace approximately 75% of those dollars for her future retirement needs. Now, if you would like to change that assumption, you certainly can. You can request or uh, put in a hypothetical for more or less for replacement, and certainly include a partner or spouse in this calculation as well. We're utilizing 75% for right now, which of course 75% of the $54,000 figure is $3,400. That's what we're looking to access for Taylor's future retirement needs. In looking at the rest of the tool, we are including monies that she has contributed to her retirement account, also employer contribution. Social Security, again, is an assumption. You can modify the assumption. If you have access to your Social Security benefits through the SSA.gov website, you can certainly include that and have that be updated. You might also have some other assets to include in this calculation, whether it be previous retirement plans, maybe some investment income, savings, inheritance. Any other monies can be included. And you see, we add all of these figures together to get to the estimate of what we project for Taylor to have available to her in her retirement years. So right now, we can see we have a shortfall. The goal is 3,400. We've got approximately 2,600. We see that there's a difference, a gap. We drop down and consider, well, what are some of the things that we can do to impact this, to get a little further along, to increase the lifetime income score? You can first consider where you stand with your level of contribution. Again, we always want to take into consideration receiving full match from the employer. So if we use the suggestion and do a change, bump up 1% to the 5% level of contribution, you see that that will impact some consequences here. It will give us what the future will look like in terms of less before tax pay, but also too more in retirement income. And certainly you can see that that has positively impacted the lifetime income score. So that's a good thing. That's something that Taylor is considering to do right now. So she will review the change, look to see that that's in fact what she'd like to do, submit the change, and actually have processed a contribution change right online. So again, 2 clicks, done. You have your confirmation number. You can print this, you can take a screenshot. Either way, keep this in your records so that you know you now have effectively made a change to your level of contribution. Another area that you can impact, as I mentioned, if you would like to use the tool for your future Social Security benefits, we can also have this change uh, made in the assumption it will give us what the future dollars will look like, and obviously see a really, really good impact on the lifetime income score. So, all of this is just helping you, guiding you, giving you some ways to use the tool, use the slide bars. You certainly can take advantage not only of this area of the tool as well, consider future healthcare costs, what that would look like, what that means in terms of dollars. Obviously, compare yourself to your peers, whether by age, by salary bracket, or gender. See where you stand with your level of contribution. And lastly, will the money last you? I mean, no one has a crystal ball. Nobody knows how long they'll be living in their retirement, but just some considerations if you want to have a projection of what could be for the future. So, great tool, great engagement, and get your family involved so that you absolutely project for the needs that you will have for you and your family in your retirement future. Now, looking at the specifics when it comes to your account, you have the drop down for the details of your account. These are all the options available to you, as well as clicking onto the plan name. You'll get to the same location either way. And now you see all of the options available to you as far as what you can look at via your account details. So all of the items here are listed to the tiles on right. You see balance, annual rate of return. If you didn't change your contribution on the landing page, you can certainly make the change here, as well as by clicking onto the contribution section. You can make the change here as well. I know we want to make sure and encourage all of you as participants to have your beneficiaries updated. So, this is where you will include primary beneficiary information. If your spouse is your primary beneficiary, you then will give us their name, birthday, social, contact number. Make sure that's complete. Make sure that everything is spelled correctly, and you can confirm and have another confirmation, print, take a screenshot, have this in your records. You certainly can go back and add additional beneficiaries as secondary contingent beneficiaries. Again, we're needing the same information, name, birthday, social, and a contact phone number. When it comes to your investments, as Suzanne was mentioning, you have an opportunity to choose your own funds. You have an opportunity to have a target date fund, as well as setting up the plan. If you're interested in having that managed program, this is where you would enroll and include the information that they're asking for to have that be set up. All of the funds available to you in this portfolio are listed in the investment lineup, and anything that has blue is an area for you to be able to drill down and get more detail about the fund as far as the management, the objective, performance, so forth. So, lots of ways to get information particular to your plan. And the last area that we'll look at that's really helpful for your overall personal finances is My Financial Path. This is where you have the opportunity to take a very quick 5-minute survey. It's not more than 5, 6 questions, which will point you in the right direction when you consider other areas of your finances. You can see here that we already have an area specifically designated for debt in terms of your refinancing or consolidating of student loan debt, possibly just setting up another plan for future student account for monies for the future college needs for a child or a family member. And then we have the Learning Center, which is our library. This is really helpful for someone who wants to look at one of these areas of their personal finance. You could see you can click on get additional videos, PDFs, all ways for you to consider these different areas. And it's all user friendly, very simple language, a way for you to feel like you're really tackling this area and doing it at a pace that makes sense for you. So, any terms, anything that needs a definition, feel free to go to the glossary. And also, helpful are calculators. So, there might be someone out there who just needs to revisit their budget, or maybe they need a place to house their incoming versus outgoing expenses. Please know that all of this information is private. No one at your employer group nor Empower will have access to your personal budget. So use this. Enter in the information. If you don't want to use the tool online, you can certainly print and download a copy of the worksheet and put pen to paper. If you have a budget and you just need to revisit it or just find a way to manage it, use this tool. Consider making the monthly budget a part of your personal finances that you will tackle and maintain going forward, because obviously it's a great way to feel like you are the director of where your money's going, as opposed to your money telling you what it wants to do. And the last calculator that I would like to point out is, you can see that there's so many, between setting up the emergency savings fund, maybe considering what to do with pre-tax versus after-tax. I'd like to show you growing your investment, because here we are able to consider what the future growth of your retirement account would look like. So I'll go back to Taylor Smith, our employee, and I'll say Taylor currently has 25,000 in her retirement plan. She's got a good 30 years to work. She's 36 years old. She's got a moderately aggressive portfolio with an average return of about 8%. If she continues to contribute $100 in her pay every 2 weeks, I'll say, you can see what's going to happen with that growth over time. And this is really exceptional. So she's got 103,000 that she's contributed out of pocket. Her growth on her money is more than $450,000. And that's just amazing to me, and also the idea of why it is that we do these types of plans. This is our opportunity to have that nest egg. This is our opportunity to be able to save and have the dollars that we need for our retirement futures. I'll bring it back to the moderator, and you all have a great afternoon.
Thank you so much. I just want to leave Suzanne any space. Suzanne, if there's anything you need to add right now to your presentation to sort of wrap it up.
Well, this side just lets you know that we do have an app both for Apple and Android. Also, if you happen to have an iPhone and you want to have your 401k on your phone, you can. Next slide, please. And this is the last slide. So I just want to let you know that we have that fabulous website, but we do have an 800 number. They're there every day until 10 p.m. Eastern Standard Time, and Saturday until 5:30. And those reps you having trouble logging in, you can find something on the website, or you just have a question about your account, they're there to help you out. So lots of resources for you. Again, website is Empower My Retirement. And thank you very much for your time today.
We know this is a lot of information, and as with any system demo, this is not information we expect you to remember. There's tons of resources that will be available to you to sort of refresh your memory on where you need to go and what you need to do, and even the parameters of the program. Obviously, you've heard about sort of all the ways in which we support 401k, but any questions that you have when you get to the point of enrollment, we can help you with that as well. So Staying on the theme of support, I wanted to introduce you to another key resource for you in your retirement planning. This is our retirement broker. Next slide, please. Um, our retirement broker is named Peter Andrews. And for a lot of organizations, you might not know this person if you've been part of a retirement plan, but we have a unique relationship with Andrews Benefits. They've been connected with the Goodwin community for well over 20 years now. And Peter has personally kept an eye on our 401k plan in terms of making sure we have the right resources to keep an eye on our investments. For those of you who are a bit more savvy in the retirement planning, you may be wondering what's the quality of investments and how do we know that? Peter is the person that partners with us to make sure that we stay on track there. He also is really gracious in making himself personally available to individual employees who want to talk about their retirement, which is a really, really nice thing to have access to. So I want to introduce you to Peter and allow Peter to share a little bit about what he does.
Good afternoon, everybody, and thanks for taking time, although I'm not sure that anybody really wants to be outside today, so maybe sitting inside the AC is a little better, even if it's talking about 401k plans. So the good news about there's lots of good news about the Goodwin 401k plan. First of all, you've got 22 funds from which to choose, 14 funds that are managed on a daily basis. And then, as previously discussed, there are 8 target date funds. The target date funds, just to try to add a little bit, as Suzanne said, they're geared towards having a date in the future when you think you'll be 65 or 67, and that you'll match up a fund that will coordinate with that. It is actively every single year adjusted to your current age, so you don't have to do anything behind the scenes. Adjustments are being made so that when you do reach retirement, your overall portfolio will be a mix of a fairly conservative portfolio, knowing that you might, in the very near future, be using the money to live on a daily basis. We do have funds from Putnam, American Funds, Great West, PIMCO, BlackRock, and Franklin, so some of the major names of the investment community. We also use an outside source to monitor those funds on a daily basis to make sure that they are performing within their investment category up to par. So on a quarterly basis, we get a report. The report basically says they're doing their job. If suddenly they're not performing up to par, they might be put on a caution or a monitoring list. And then if for some reason, as we all know, companies get sold or bought, or people leave or come on who are managing this money, if the performance goes downhill, we are actively going to change the fund within the same category to a different vendor that we think looks at doing a better job in the future. If you are into 401k plans or retirement plans in general, the other factor is costs internally. There are costs, obviously, to run any type of plan. We also monitor those, and I can honestly say, and proudly say, actually, that the costs in the internal costs of this plan have come down each and every year pretty much over the last 5 years. So we've been, we constantly monitor that to try to make the overall investment return for you as participants to be the best possible. Couple of quick points. Beneficiary. So you will be asked to put a beneficiary. I think it's a incredibly good time in your life to make sure any other accounts you might have the appropriate beneficiaries. Last thing you want to do is have something happen to you and have money go somewhere where it was not meant to go. We unfortunately had that circumstance a few years ago. So, please, you can change it at any time, but do really look at who the beneficiaries are on both this account and any other accounts that you have. You can roll money from, as Suzanne said, other sources, whether it be 403B money, either from TIAA-CREF or from VALIC. Cheryl will have some forms for you that you will need to sign, in addition to giving some instructions to the Empower rollover group. I'm here at any time to help review those forms, answer any questions. There's no universal answer as to whether everybody should roll over their money. But I can tell you, having all your money in one place certainly makes it a whole bunch easier. In the vesting schedule, because some of you might not be familiar with that, just realize any money you roll over or any money that you contribute to the plan is not subject to the vesting schedule. It is only the match that has vesting schedule associated with it. The last thing about the plan is that's unique is the Roth portion, which does allow after-tax contribution and tax-free growth going forward. So, again, you're going to pay a little more in income tax, but on a long-term basis, you may be able to accumulate a fairly large pot of money that when you do take it out, you will pay no taxes on, nor will you pay taxes on the growth of the money that has occurred. You can, as Suzanne again said, split the contribution. So if I'm going to put in 10%, I could put in 5% Roth, 5% regular. My match is always going to come, on a pre-tax basis and taxable to you at a point. We do have within the funds, we do have some index plans, meaning that they're pretty much stoic investments, but they're going to match the returns on the Standard & Poor's or some of the other portfolios that are out there. And then we also have some actively managed funds where everyday portfolio managers are looking at the stocks and bonds within those portfolios and buying and selling to manage them to achieve the best return that they can for you. I know a lot of questions will come up in the question and answer session, so I'm not going to spend a lot of time anymore here. But as I say, I guess the only thing I can emphasize is I'm always glad to hear from you. I can play devil's advocate almost better than anybody else out there. So I'm glad to walk you through what's going on, and don't miss the opportunity. The Empowered site does have a tremendous amount of opportunity from a learning experience and calculators that are really fun to use and very honestly can really help you get to where you want to be. So I guess that's it until questions. Question just came up that just said our overall limits for both 401k and Roth the same, and yes, that's the 19,500 minus whatever your year-to-date contribution has been for your 403b plan.
We've already met Susan, so she's on our panel of experts from Empower. Peter Andrews, we've just met him. He's also on our panel of experts. And then we have Melitha Priscotto, who is here. Most everybody knows her on this call. So she's the Director of Human Resources here. So she has questions in regards to like the 403B, what we currently have with UB right now. And then I think Jeff Capone is on here as well. For our panel of experts. I'm not sure if Jeff's still on, as far as he's part of our fiduciary, so our panel of experts. So that's who we have for experts, Jean. Should I start with the first question that we kind of have some questions already, set up, if you will. Okay. So the first question that we get a lot is, what is the difference between a 401k and a 403b?
So I'll take that question. So really, in big picture, it's really just aging, to be honest with you. In the old days, most nonprofits had only the 403b as an option, and these are just IRS section codes, to be honest with you, or bills that were passed. So the 403b was appropriate for a lot of nonprofit organizations. Goodwin, probably 20 years ago, decided to go to the 401k option when it became available. From a day-to-day standpoint, there's really not much difference. Contributions are similar. The Roth option on the 401k is certainly unique. Both plans do allow for loans against the account as far as that goes. I think Jean will get into a little bit of technicalities in that area in a minute. You can transfer money from TIA or CREF or VALIC into the 401k plan with Goodwin. But the plan itself, in terms of how you can change your investments, which you can do every single day with the Goodwin plan, how much you contribute, really is not much different at all.
Perfect, thank you. And actually, I'll piggyback on your comments, Peter, about 401k loans. The question is, are loans allowed on the Goodwin's plan? Suzanne, can you talk about the parameters?
Absolutely. Loans are allowed. You're allowed one loan. The minimum loan is $1,000, and the payback period is 5 years, unless it's for a residential loan, and then it's extended. So definitely available to you.
Perfect, thank you.
And one big difference, if you do take an Empower loan, the
Right.
money will come out of your payroll check,
Yeah.
not out of your personal checking account.
Right.
Yes, thank you for that. That's right.
Yeah.
Okay. Also, kind of piggybacking on the loans. What if I have an outstanding loan currently with the 403B plan with UB? Will that transfer over to the 401k?
I'll take that one. The loan that you currently have, if you took your loan out before September of 2020, you'll be able to continue to make your payment as you're currently doing. If you took it out after September 2020, you will have to pay the balance that's left, or it will be deemed distributed, which means you'll have to pay taxes on it, federal and state. And depending on your age, you may have a penalty that you will need to pay as well. But I believe when we checked, that might apply to maybe one person. For the rest of you who have loans, you can continue to make your payment the same way you were doing before. If you have more specific questions regarding how best to handle the loans, you should speak to VALIC, that's David Quas, or to Tia. Ronan or John will be able to help you with that process.
Okay, great. Thank you, Melissa. Next question. What resources are available to assist me in rolling over into 401k plan?
As I mentioned in the presentation, we have a team that's dedicated to just that. And so there is an 800 number you can call. We will make sure that you have those resources available to you. And, Peter is definitely, if you have a question, he, like he said, he'll play devil's advocate and go through it with you. So lots of resources.
You will also have to complete forms through TIA and VALIC. And so the group that we're working with, Angel, Angel Group, they are also going to be available, because you will have to fill out a form if you have funds with TIA that you wish to roll over, and the same if you have funds with VALIC. So they will have a form, and for the 401k, you'll have another form, but the Angel Group will work with you to make sure that the section that you need to fill out with TIA or VALIC is done smoothly as well.
Okay. If I've contributed already to my 403B account with Old UB, can I contribute to the 401k at Goodwin? And if so, how much?
Okay. As Susan mentioned earlier, there is a maximum that you can put into the 401k, and it's the same maximum for the 403b. It's not two separate amounts, it's the same maximum. So the money that you have put already into the 403b needs to be subtracted from the maximum contribution that you can make to the plan. And on your direct deposit or on your pay stub, it will show you other deductions, and it will show you what you were putting into the TIA account right now. And over to the right-hand corner, it shows you the current year, which shows you what you have coming out each pay period. And then year to date shows you the total amount you have put in up to that point. So on June 30th, you'd really need to look at your year-to-date contribution, subtracted from the maximum, and that's the amount that you can. Having said that, I would encourage you to work with the 401k group to make sure as you're doing it, once you do it, to just any questions that you might have, but it will be your responsibility to double check the amount that you have come out. I will be sending out, I said that last meeting, a memo in the next couple weeks that will remind everyone of the maximum contribution and reminding everyone to take a look at your pay stub or your pay advice and see how much you have contributed as of June 30th. We also will have another group meeting coming up. It's scheduled right now for June 24th from 10:30 to 12:30. The notice will go out sometime tomorrow. And I would advise as many of you as possible to try and attend that meeting because we will go over some of these things again. And it's also an opportunity to touch base with Tia and Valak on these questions.
The next question, I actually think I could take it. And the question is, when can I access the Empower website? And the short answer is July 1st. But the long and very important answer is you can access as early as July 1st if you indicate to us that you wish to enroll in the 401k system on July 1st. And you can do that by sending an email to Cheryl at her Bridgeport address, and just let her know I want to enroll in a 401k plan for July 1st. Once she knows that, we'll make sure that the access is available to you. Here's why we have to do it that way. You may recall when Suzanne was talking, she talked about the fact that there's an auto enrollment that we've had to go for at least the last number of years, an auto enrollment process where if you don't actively enroll in the 401k plan, after a couple of months of employment, you will be automatically enrolled at 3%. We do that for employees. Lots of employers do that. It's considered a best practice, and it's to really encourage employees to save for retirement. However, because you all are coming over from the University of Bridgeport, we really did not want there to be a gap in your benefits eligibility. And so we are allowing people to enroll as early as day one, although normally people wait until after 60 days of employment, because we want you to be able to continue your 401k contribution or your retirement planning if you wish. So if you want to start on July 1st, send an email to Cheryl saying, I want to do that. She'll make a list and we'll make sure that system is ready for you so that when you go to the website and you put in the information they ask you as a new user, they'll recognize you. And if it turns out that you forgot to do that and you said, oops, it's July 1st and I forgot to tell someone, no worries. Tell Cheryl, we'll get it turned on for you. Just give us a day or so to turn that around and you'll have access so that you can enroll for your first paycheck if you wish.
Thanks, Jean. I love all the emails.
Cheryl loves emails. So
I love emails.
you could just sometimes send one that says, hi, Cheryl, I hope you're having a great day. None where you're sad or mad, just one where you're just saying, hello, hope you're having a great day. Just every now and again, drop one of those and it'll balance the universe.
The last question that I have is, if I have additional questions about my UB retirement after July 1st, who do I talk to?
Okay, and that's we have a Q&A that's going out this week, and in there it does provide you the contact information for the Angel Group. As I mentioned earlier on, the university engaged the services of a third-party administrator, and they're called the Angel Pension Group, or the Angel for short. And they do this type of work. They work with companies when the plans are closing. And so they have a number of years of a number of employees with expertise who will be able to walk you through the process. We will also be making sure that we constantly send out information. So please keep an eye out for that. But one package that is going out this week, you should look for that, as well as the announcement that's going out tomorrow, I believe. It was also mentioned before that you can also reach out to Tia and Valak because both groups will be available to talk with you as well.
Thanks, Melitha. Natasha, I'm going to turn it over to you now to do the questions in the chat room.
All right, great. We have some awesome questions. Let's get started with faculty had a few additional questions as far as when they would be eligible and can enroll. So are faculty enrolling on 7-1 as well?
That's correct. Faculty are enrolling on 7-1 as well. So if you are someone, and you know who are full-time faculty, your full-time role is starting on August 16th, but you're taking on some type of contract over the summer, you too can enroll for July 1st.
Okay, wonderful. And does that apply for faculty that are not starting to teach classes until the August date?
Actually, since they won't have any pay coming from us in July, there's no way to contribute. So they will be eligible to contribute starting September 1. So if they start on August 16th and they're not doing any work in the weeks in between, then their first eligibility will be September 1.
Great, thank you. And then next question pertains to the contribution amount. Given the dissolution date for the old UB, do you know when we must look at our pay advisors to see what the total we have contributed to our 401B, or will that be available after June 30th?
On the June 3rd, as of June 30th, when you get your last pay stub, it will be on there. So your last pay stub is what you should look at.
Thanks, Melita. And next question related to contribution amount is, can the auto enroll amount of 3% be adjusted?
Absolutely. Yes. Yes. You can go in and change your contribution amount, lower it, raise it anytime you want. So yes.
Okay.
As a follow-up, as just to clarify on that, Susan, the 3% though, you have to do 3% in order to get a match, correct?
No, you could do 1%, but you'd only get 0.5% in match. The match formula is 50 cents on the dollar up to 5% of your compensation. So
Okay.
whatever you contribute up to 5% will be matched,
Okay.
but it's going to be based on what you put in.
Okay.
The other quick clarification is we are not mandating that you participate.
Right.
So if you get auto enrolled for 3, you can opt out of that completely if you just are not a person who wants to do retirement planning.
Right.
Or if you feel like your planning is sufficient in other places.
Correct.
That happens with folks. And so the important thing to note, if you do not wish to be auto-enrolled, is that you do have to take action. That's the most important thing to know. And I would encourage you, if you're anything like me and you get tons of mail at home, snail mail, and you say, I'm going to open them this weekend. Sometimes something that's time sensitive may slip by me. And so I would encourage you all to put something on your calendar, if you're like me in that way, for August 1, because on or around that date, you're going to get a letter from Empower. It's going to be personalized to you, mailed to the home address that we have on file that when you did the onboarding process, and it's going to tell you that you're going to be auto-enrolled in September, and it's going to tell you what to do if you don't want to be auto-enrolled. But if you do nothing, the auto-enrollment will happen, and the contribution will be yours. It will be in your name, but we can't just do a refund. We can't do a payroll reimbursement because the federal law just doesn't allow that.
Yep.
You can take a distribution officially and pay the fines and all, the things that Melissa described in the 403B plan is similar for 401k. But if you do nothing, we can't just reverse it or back it out.
Great, thank you for that clarification. And just to, as Peter mentioned, as far as using the 401k, the next question is, do we have to use do we have to use Empower, or can we use another retirement fund?
Empower is our selected retirement vendor. That may change in the future, but at this point, Empower is the choice that you have.
Great, thank you. Next question. Is it possible to put outside money into your Empower 401k? In other words, the money would not be payroll deduction.
The only way you could put outside money in is if it's a other retirement plan. You can't invest just, money that you have at the local bank or something like that. Only rollover contributions from other retirement plans can be rolled into this plan.
Okay, and if a employee was to leave UB at some point in the future, what fees are associated with rolling the funds out of Empower and into another retirement fund?
I'll take that. I believe there's a $50 fee for distributions.
Thank you, Suzanne.
It's standard, yes.
All right, great. So in addition to those, I just have a few more general questions. We have a participant that would like to know if the contingent beneficiary can be a trust.
I'm sure that it can be. The only thing that I will tell you, in most cases, they will need the original date of the trust and very specific language as to how the trust is named. So if it's the Peter Andrews Family Charitable Trust, I've got to give that full name along with the date that it was created.
Okay. And next question, I believe this was already touched on as far as forms, but someone wanted to know if we will be getting distribution forms from UB at some time after June 30th.
And when we have the meetings, we'll go over it in more details. But if you wish to roll over the funds that's in with VALIC or TIA, you will need to get forms from both companies, and you will need to complete those, and you will also be getting forms from Empower to get the monies in. So yes, there are forms that you will need to complete on both ends.
Mm-hmm.
They will not be.
HR cannot provide those forms. You have to get them directly from TIA or VALIC.
Correct. Yeah, they're not automatically provided.
Right.
All right, and then I just had a couple more questions about, one of them is about distribution. If you are over 70 and still working, are you required to take a minimum distribution?
I'll answer that. No, you're not. As long as you're still working, you're not required to take a required distribution. And correct me if I'm wrong, Peter, but I believe they raised the age to 72.
72, right?
Yeah, that's correct.
Yeah. Woo! Yay! No. So if you're working, you don't have to take the money out.
Right.
All right, great. So those were all the questions I had on my list, but it looks like there's a few more in the chat now. So I'll hop over to the chat and see if we can address some of those, okay? Bear with me just a little bit. So we answered that one. Jean, could you just clarify on the faculty starting on 8/16 what the earliest that they can sign up for through Empower would be?
Sure. If you're starting on 8/16 and you're not doing any teaching or any kind of special contract after July 1, the earliest you can enroll is September 1. And that's because it is the first of the month following your start date.
Okay, great. Okay, and then just to clarify, is it possible to leave our funds in the current TIA plan and contribute to the new 401k?
Yes.
Yeah.
Yep. Yeah, that's fine.
Well, you should discuss it with someone at TIA as far as what you wish to, how you wish to have the funds handled going forward. So again, I refer you to Ronan or John at TIA, or you can even call their 800 number to get some advice as to what you wish to do with those funds.
Thank you, Melita. And it looks like the next three questions are related to vesting. So I'll read them and then you guys can kind of tackle them all at the same time. So can you repeat what you said about vesting in the university's contributions to the 401k? According to the vesting schedule, the Goodwin match is not available for 2 years. Is this correct? And then the final part of that is, what is the vesting period for the matched funds?
So I'll speak on the first part of the question. The match begins on day 1. So every 2 weeks, when you make a 401k contribution, the match that we described based on formula gets contributed every 2 weeks. That begins day one. However, it takes 2 years of service for you to be at a point where you begin to vest, where a portion of that contribution from Goodwin belongs to you. That's the only difference. So the match is occurring and your account is accruing value based on that match, but it doesn't belong to you. Your contributions, as we know, always belong to you. Those contributions start to belong to you in parts after 2 years of service. And so I guess that's the segue to the second piece, which is around the vesting schedule, right, Natasha?
Yes.
And so the vesting schedule occurs over a 6-year period. So after year 2, you are 20% vested, which means 20% of what Goodwin has contributed as a match is now yours. It belongs to you. If you were to leave, you would be able to take that 20% with you along with your contributions. And it goes up to 40, 60, 80, and 100, which matches your 6 years of service.
Okay, thank you, Jean. I think we got them all. Let me just do a quick scan here, make sure we didn't miss anything.
One quick comment while she's reviewing those, just for all you participants who are saying, well, how do I know what the name of the funds are, or have they lost money, made money in the last few years or whatever? There is a PDF document available. Jean has it, Cheryl has it, Melissa has it, I have it. So feel free to reach out to any of us and we can email it to you at any time.
Yes, we are planning to send that out to all of you. This was the second meeting. We had one last week. What we're planning to send to you next week are a few things. This PDF, links to a recording of the video in case anyone missed it or wants to rewatch it. And then lastly, a consolidated FAQ, which will include some of the questions that came up today. And we may collapse them into themes. We're going to add to them the questions we heard last week because some of them aren't the same and we want you to benefit from both. And so you'll get all of those next week. I think we're aiming for, Natasha, don't make me start making up dates. You set a date.
For the video, I believe we're aiming for the 18th.
Okay, so we'll send them all out on that day.
Yeah.
Thank you. Okay, any last words of wisdom from our panel of experts? Anything reminder you just want people to be left with?
Just have one. I'm going to just, Dr. Pearl is asking about the pay stub. You can see it afterward. It will still be available on WebAdvisor, so you can see the pay stubs afterwards. So it does not have to be precisely on 6:30.
Cheryl and I actually gathered up a few questions that we consider frequently asked questions, things that we know that people will want to know. So why don't we introduce actually the people who will be answering your questions. You've met a couple of them already and some of them you already know. Cheryl, do you want to introduce our esteemed panel of experts today?
Sure. So one of the first people on here is Susan, who's talked to us about the Empower platform and all the good stuff there. Peter Andrews is also one of our experts. We also have Melitha Prisgoda. Everybody knows Melitha here from UB as the HR director. She's also on our panel of experts. And we have Jeff Capone, who is joining us he's our fiduciary.
This is like the retirement nerd Brady Bunch. I'm really liking it. This is really cool. Love it. Welcome, everyone. And thank you for, again, this team for being here today. There's been so much work happening behind the scenes, as I'm sure you can imagine, 2 plans, lots of participants, lots of history, lots of work to be done. The work involved in creating a new plan, lots of work to be done. And this team, the faces that you see here today are among the folks who have diligently given up time at least every other week for months to make sure that you have all the information you need in terms of the plans that you're coming from, as well as the plans that you have an opportunity to go to. And I'm so grateful to all of you today. And I just want to acknowledge your hard work and your commitment here today with everyone. So thank you. All right, Cheryl, let's use some of our Q&A. What do you got?
Okay, so the first question that has come up a lot in our sessions that we had last week and previously. So what is the difference between a 401k and a 403b?
In the simple terms, there's really not a whole bunch of difference, to be honest with you. Both allow as I said, both allow pre-tax deductions. Our 401k happens to also allow after-tax deductions with the Roth option. But, contribution limits are very similar. It's just parts of the law. The reason you have a 403b, or one of the reasons, was years ago, that was the only option for a lot of nonprofits. So a lot of them did it, kept it, and didn't make any changes. Goodwin decided to make a change, some time ago to a 401k platform. But on a day-to-day basis, it's not dramatically different, in terms of your experience.
Cool. I know that we have Frank Rossi, who's not on your screen, but he is one of our retirement experts. And Frank, is there anything you'd like to add to that, or did we stick the landing?
I think that pretty much sticks the landing.
Perfect.
403Bs are the 401ks for nonprofit organizations. Peter hit it on the head. And
all right, Peter, you get an A.
Wow.
Okay, here's a question that I have. Are loans allowed on the Goodwin plan?
I'll take that one. Yes, loans are allowed. You are allowed one loan. The minimum loan is $1,000, and it can be amortized over 5 years unless it's for residential, and then the time frame increases.
Perfect. Thank you.
Okay. So tailing on that, what if I have an outstanding loan with my current 403b plan? Will it roll over to the new 401k plan, or will it stay as is?
I will take that one. If you have a loan currently with TIA or VALIC, you will be able to just continue to make your payments. There is one caveat. If you took your loan after September of 2020, you will not be able to continue making payments, and you will have to pay it out as a lump sum, whatever the balance is, or it will be deemed distributed, meaning it will be showing that you got those funds and you will need to pay taxes on it. So the general answer is, if you have a loan that you took before September of 2020, you can continue to make your payments the way you're doing. You can also talk to Ronan or Dave or John, as far as John and Ronan at TIA or David Kwas at VALIC, in case you want to go into details with them as far as any more information you need requiring you as far as the loan is concerned. But you can just continue to make your payments.
Great.
Remember, though, if you took it out after September 2020, then you will have to make that final payment.
Awesome. Thank you. And I do want to point out one logistical or administrative difference in loans between UB and Goodwin is that loan repayments are done through the payroll system. So if you take out a loan from this 401k plan, the repayment would actually occur in your biweekly payroll process. Okay, next question. We talked about resources. What resources are available specifically to help people with their rollover?
I can talk to that, and then Peter can speak as well. But as I mentioned, we have a team dedicated to incoming rollovers. There's an 800 number that you can call and speak to a registered rep, and they'll walk you through what your options are and make it easy for you. And I'll turn over to Peter as well on that.
Yeah, I don't know. And Jeff actually is pictured here as well. And Melitha may know this as well. TIA-CREF may have some paperwork of their own, some required forms that they're going to require you to sign as well. Just really to acknowledge that you're comfortable releasing the money to Empower. It's more a formality than an obstacle, and it's common among everyone, to be honest. So it's not something that's unusual as far as that goes. So that may be it, but it's a fairly simple process. And I think the big emphasis is it's non-taxable to you.
And to confirm Peter's answer, yes, you will need to get a form from TIA, and you will also need to get one from VALIC if you're looking to roll the funds over. So authorizing them to roll it into the 401k plan.
And I'll just add that there's forms on our side as well, accepting the rollover. So it's nice to have somebody help you through the process because it gets a little confusing.
Okay, thank you. So people that have already contributed to the 403B here at UB, how does that impact my contributions to the 401k, the annual contribution limit? How does that impact that going forward?
There is a maximum, and I believe Peter spoke to it before, and I believe Susan as well, that you can put into the plan on a calendar year.
Mm-hmm.
So what you will need to do is look at your pay stub or your pay advice, and I have my copy just looking at it. If you look under where it says other deduction, and you see where it shows tier additional and tier regular all the way to the end, it has year to date. If you add those two columns, it will show the amount that you have contributed through June 30, 2021. You can now subtract that from the maximum amount that you are allowed to put into the plan for this year. I will be sending out a memo in the next few weeks, just as a reminder as to the maximum contribution, and also reminding you that you really need to take a look at how much you have put in before up to June 30th, and therefore how much more you can put into the current plan so that you don't go over the maximum contribution.
Great, thank you. Next question is, and this is one that's come up a few times, when can I access the Empower site?
7-1, until that time, you are not an employee of the Goodwin, eligible for the Goodwin retirement plan. So 7-1 would be the first day.
This is a really important note that I'd like everyone to, if you're really interested in beginning the 401k contribution immediately upon July 1st, here's something that you need to know. You may have heard Suzanne talk earlier about the auto enrollment, that if you do nothing, if you decide not to enroll on July 1, that you'll automatically get enrolled for September 1. But if you are someone that says, nope, but don't want to wait, I really want to do this on July 1, you have to do one small thing. You just got to tell us. You don't have to fill out a form. You don't have to, have a special secret handshake. You just need to tell Cheryl, shoot her an email and say, I want to be in the 401k plan on July 1. If you do that small thing, we will make sure that you have access to the 401k site, the Empower site on July 1. And what that will mean for you is that you'll be able to then go in, decide what your contributions are, as Doris showed us, so that when your first paycheck from New UB happens on July 16th, you will see that contribution happening. You'll see the match. You'll see all the things occurring. And so that's the only thing you need to do. If you don't do that, again, remember, don't worry. Even if you forget about this, you get focused on some other aspects of your life, but you do want to be in the plan ultimately, come September 1, you will become a member of the plan and 3% will come out. At any time, you can make that number higher, you can make it lower, or you can stop entirely. So I know that was explained earlier, but it's such an important element. I want to just reiterate it. Thank you.
Okay. If I have additional questions about my retirement plan with UB, who should I speak to?
Okay, so you can reach out to me, and everyone, I believe, have my contact information. You can also reach out directly to Tia, and I believe most of you will have Ronan's information. He is the member service rep who is always on campus, well, now also via Zoom, that you can speak to one-on-one regarding your funds. You can also reach out to John Moriarty and to David Quas at VALIC. We will be sending out a Q&A. You should be getting the mailing. We're hoping to get it out this week, but we may not get it out till early next week. And in there will be some Q&As, some of what you've just been listing a while ago. And in that mailing, it will have their contact information as well. But in the meantime, if you have questions, feel free to reach out to me, and I can provide you with their contact if you want to speak to someone directly from TIA or VALIC.
Thank you, Melitha. And one more programming note around Q&As. Because you are living in one plan or set of plans today, and we're talking about a plan for tomorrow, the FAQ that you get from Melitha will be all related to your current plans at UB. And then after we have the session on June 9th next week, we will get a set of FAQs about this 401k plan out to all of you as well. So you're going to get both sets of documents, and the goal that we've been working on for months is making sure you have everything you need to answer questions for both parts of your existence.
Thanks, Jean. Natasha, do you have questions from the chat room that you wanted to share?
Yes, we do. We have some great questions. We're going to start off with just a few general questions that I think will be quick answers. So the first one is it a requirement for Goodwin employment to contribute to the 401k?
Absolutely not. It's not a requirement. It is an opportunity. It's really a benefit that you get to take advantage of to support your retirement planning. But you know your circumstance, you know what your needs are, and so you get to decide if you want to do that. So if you don't want to be in the 401k plan and you don't want to auto enroll, keep an eye on your mail, your U.S. mail. You're going to get a letter in the mail on or around August 1. That's August 1st, because it has to be 30 days before September 1st, that will tell you, hey, we're going to automatically enroll you in 401k unless you tell us not to. It'll tell you exactly what to do. And so no worries, you don't have to contribute.
And Jean, just to follow up on that, what if somebody missed the mail, someone like me who doesn't really pay much attention to the mail, they get at their home, and they get auto-enrolled? What happens then? Great question. What happens is you can stop the contributions immediately. So as soon as you become aware and say, oh, no, I overlooked this, but I don't want to be in there, you can stop it. What we aren't able to do by law is refund you that money. The account is there. The monies will be there for you. If you choose to take a distribution, there's rules around that. The Empower team can help you with that. Peter can help you with that. So it is possible to do a distribution, but what we can't do is refund your money to payroll, because the law doesn't allow that. So if you feel really strongly about not contributing, be sure to keep an eye on the mail and make sure that you opt out of. Just know that the auto enrollment piece is not designed to handcuff anyone. It's a best practice that most retirement plans do nowadays, because there's a real crisis in our country around people being ready for retirement financially. And so what we have found works, the royal we, not Jean White personally, what we found works well is the auto enrollment process makes people better prepared for retirement, but no one is obligated. Great question.
Okay, thank you. So next question is, does Empower have a Roth 401k option?
Yeah, as I had said before, it does. It has both a regular plan, tax deductible contributions, and then the Roth contribution as well. And you can mix between the two. So if I'm going to put in 6% of my salary into the 401k, I could allocate it in any combination of Roth or regular plan, from 100% regular to zero Roth, or 100% Roth and zero, or anywhere in between.
Great. And I'll just add one thing to that the Roth contributions are matched, but the employer match is always considered pre-tax. So you may be contributing your Roth, but the match will be taxable when you take it out.
Okay. And is there a 457B investment option?
There is a 457B plan at Goodwin. However, it is not available to employees at this time. It is considered a top hat plan that the president is part of. And so unfortunately, it's not one that most employees can enroll in and contribute to.
Thank you, Jean. Okay, and now let's go on to, we have a few questions regarding vesting. So first question asks, what is vesting? Does that mean if I only work for 1 year, I don't get any of the matching funds from Goodwin?
That's correct.
That's correct. But a vesting schedule is, as Suzanne had said, is really to encourage longer term employment. any rollover money or any employee contribution that you make is 100% your money at all times. The vesting schedule only applies to the match. So as you could see, the longer you work, the greater percentage of the match you will receive when and if you were to leave Goodwin.
Great. Thank you, Peter. And that was actually the second question. They just wanted to confirm that Goodwin's contribution towards retirement, they would not be fully vested, but they would get their full contribution portion.
Mm-hmm.
Great. All right. Moving on to the match. There were some clarifying questions that were asked. So Goodwin matches 50% of your contribution until you reach 5%. Therefore, the maximum employer contribution is 2.5% if you contribute 5%. So it looks like we're just looking to confirm that.
It is confirmed.
Perfect.
That's correct.
Awesome. Thank
So
you.
even on that contribution, I just want to make it clear, even if you put in 10%, the most the max will be is 2.5, correct?
That is
Correct.
correct. Thank you, Cheryl.
Great. Okay, next question. Is there a way to get an output listing of available funds in, say, a PDF format, or is the listing available online? The only option I see to see this list. Sorry, let me rephrase that question. So it looks like they're asking if there's a way that they could get a PDF of the options available, or is it only available online?
No. So here's the deal. So since obviously there's kind of an obstacle of getting online to get information for a while, what I will do when I hang up this call is I will email Melissa the list, and anyone can feel free to email or call me, and I can send it directly to their personal email or their UB email, whichever they would prefer. I have a PDF version, and I'm glad to answer any questions.
Perfect. And Peter, actually, if you could send that to Cheryl, I'd appreciate it.
I was going to do that as well.
Melissa's like, I don't need one more email. Thank you, but no, thank you.
I'll send it to all of the parties, that I have emails for, which is everybody.
That's perfect. Thank you.
Okay, great.
Peter, I'll take a copy as well for myself.
Yeah, I will. I wasn't going to exclude you, Melissa.
I know.
Okay, great. So next question is, can I combine my TIA-CREF account with Empower? What are the pros and cons?
Well, you absolutely can. Certainly one of the things you want to look at is under all of the UB plans, there may be an early withdrawal charge imposed. So, again, it seems that there's different contracts based on different years that you entered into the system, but an early withdrawal charge would say, and I'm going to use just numbers, I have $20,000 in my account, but it says if I didn't have my money in there long enough, there might be a 4% withdrawal charge imposed on the transfer of the money. So in my example, it would cost me $800. So what I might want to do is say, it's not worth it to me to have an $800 cost. I'm going to wait a couple more years to when that $800 goes away. But we can help you, and I know both Cheryl and Melissa will be able to help you look at that, as well as I can help you look at that, because obviously it's a complex decision. Obviously we feel that we have a wonderful platform of investment options available to you, and you can choose your own. So, we don't think in any shape or form that you're going to be compromising yourself in terms of the investment options available.
Yeah. Maybe
And just to follow up on that, Peter, and I'll ask Jeff to chime in as well. Both TIA and VALIC have funds, and I'll use TIA as an example, where if you cannot take all of it as a lump sum, it has to be taken out over a period of about 9 years. So you could set it up so that it starts rolling over. And VALIC also has some similar funds where you're not able to take it all out as a lump sum. And Jeff, you can elaborate a little bit more, please.
Yeah, well, I guess I wanted to just reiterate what Peter and others have said. Firstly, I'm the retirement plan consultant that's looked over the TIAA-CREF plan that you have and the investments, and I just wanted to reiterate the strength that you have going forward in the retirement plan and with Empower, my firm who works with a lot of schools in this whole region, Trinity College, Sacred Heart. Others in New England. I would say that we work with a lot of them, and Empower has been one of the best providers in the industry. So I want to just give you that confidence that you have a really good plan in front of you. I think it's a great opportunity for you to look at where your balances are today and make that decision. It is a personal decision. But I do think that there are some real benefits to consolidating all of your retirement plan assets in a single place. It's just a lot easier to manage at the end of the day. So that's just my sort of push. I think there are some reasons if you're close to retirement where you might want to leave some money with TIAA or VALIC, but those are personal decisions, and you can have, I would suggest having individual conversations about them. So that's just my one point. But I think on movement of money, if you did decide to move money out of TIAA, I'd say in particular, we can talk about VALIC too, but TIAA over to Empower. There is this discussion about one investment. There's just one investment at TIAA. I'm not going to get into all the details, but it's the TIA traditional investment. That's the one that can have some early or not only withdrawal penalties, but some restrictions to moving money over. So if you're deciding to move money over, I would suggest taking a look at your account statement, looking through those investments, see what you might have in that TIA traditional. Have a phone call with a TIA representative just to talk about the details. But for the most part, nearly most of your money you should be able to move over if that's what you decide to do. So I'll pause there. I could talk for half an hour. We certainly don't have that time. I know you don't want to, but I think you're in a very good spot as far as moving forward with the new plan.
And
one quick other comment, just as a follow-up. If you happen to have other 401k money with other vendors prior to your employment at UB, that money is also available to be transferred over. To follow up on Jeff's comment about consolidating plans and stop getting 10 emails from different vendors or 10 letters at your house kind of thing.
Thank you, Peter. That was actually an additional question, so thank you for answering that one. And Jeff, just to confirm what you were saying, because this is an additional question, you can retain your TIAA account and open an Empower account, correct?
That's right. That's right. You can keep monies there. There is a stipulation. You'll want to look at the disclosures that are sent to you next week. There'll be some more details. Some of the funds at TIAA are in mutual funds. And you will need to act with respect to those mutual funds by the time the plan at some point will wind down. There are other investments that are the annuities. Those will all remain if you do nothing. If you do nothing, those will remain. But the mutual funds, there is a decision that you'll need to make. So make sure you pay attention to the disclosures that are sent to you. There is a second session that Melitha, myself, and TIAA are going to run for you to listen to. I would suggest listening in on that and having that conversation and just sort of working through. But as a first step, as I mentioned before, get your account balances, take a look at what you have, and come prepared to listen and learn a bit more during those upcoming sessions.
Okay, great. And it looks like this is our final question. So this one pertains to faculty who are coming on in July as adjuncts. How will that timeline affect their enrollment?
They will be eligible for July 1st enrollment as well if they choose. And the reason is because we are just similar to all the other benefits that they're eligible for, because we know that they are going to be taking on their full-time assignment later this summer, in a few short weeks following. We want them to get access to all their benefits on day one. And so If they choose to enroll on July 1, they can, and like everyone else, if they don't at that time, they will auto enroll on September 1.
Okay, it looks like we just had a few more questions pop up in the chat, so we do have a few minutes, so I'll go ahead and ask those. Next question is, can we do the rollovers from TIA and VALIC to other funds immediately after 6:30, correct?
That's correct.
That's correct.
Awesome, thank you guys. Okay, let me just make sure I'm reading this one correctly. So can an employee who is in the union, can the pension get transferred over if the employee does not have access to the pension until 6?
Yeah, so I think, and Melissa, correct me if I'm wrong on this, the union pension is something totally different. It's not TIA or VALIC.
That's right.
It is a what they call a guaranteed pension. So that's held with the union. So I don't believe those funds would be eligible to be moved or anything.
So if they're talking about the funds that they have with TIA or VALIC, then yes, those can move.
Right.
If you're talking about what the university contributes to Local 153, that is a totally separate fund that the union maintains, and Cheryl is correct. We have nothing to do with that, and you cannot roll that over because that is a totally separate plan that the union maintains. But you will still be, you can speak with the union rep who can explain a little bit more to you as far as when or eligibility to receive that fund and so forth. So again, the union money that we put in on your behalf into Local 153, you cannot roll that into the 401k. The money that you put in each payroll into the 403b and that the university matches, yes, that fund can be rolled into the 401k.
All right, Pearl, any last pearls of wisdom? Reminders. All right, we left it all on the field, huh? Sounds good. You guys keep hanging in there. You're doing fantastically getting through all these HR processes. We're so grateful. We're so excited to be near the end. Almost as excited as you probably are. I'm going to turn it back over to Cheryl to say goodbye.
Yeah, so if you think of any other questions, if something comes to mind later on, please feel free to email me. I can get it over to Susan and Peter and the experts, and we can get the answers for you. So we're here if you have any other questions. And as Jean said, just keep getting through all of the different things you need to enroll in. Oh, and just a shameless plug for, I believe it's next week, Melitha, the 24th. Yeah. Like I said, we'll be sending out an email. Watch your emails about the UB meeting on the 403B and what's going to, those funds. So that's important to attend as well.
And also, thanks, Cheryl. And also keep an eye out for your mailboxes because some letters are coming out with information that you really should be looking at. And again, yes, the next meeting we will be looking at the 403B will be on June 24th from 10:30 to 12:30. You will be getting an email about that by tomorrow, I believe, and you will be getting a package in the mail. Please look for that as well. Thanks.
Thanks, everybody.
Thank you. Have a good night.